In today's video, I'm going to be sharing where I intend to take profits on ICP, Internet Computer Protocol. If you've been keeping up to date with all the ICP content that I've been putting out here, you'll know what my price predictions are for 2025. And, well, stay tuned because I'm going to be talking about when I think the market is likely to peak for ICP a little bit later on in the week as well. So, guys, as I get into today's video, if you do find it useful and informative, smash that like button. If you're new to the channel, subscribe, and let's jump into the charts and take a look at ICP. Okay, cool. So here we have ICP paired up with USDT. We are on the 1-day Binance chart here. Now, ICP has been a very interesting project, right? It's got some really interesting kind of structures. Let's remove some of this stuff off the chart here. Obviously, it did peak out up here at $2,831 back in its kind of launch, right, back in May of 2021. Obviously, it did not fare well for multiple reasons. I'm not going to go into all of that detail of it. It had a fantastic launch, which is why it achieved 2,831. But then there's also some background in terms of like manipulation, FTX, which anyone who's even remotely thinking about using the FTX exchange should just do some research on FTX as to why you should definitely not be using that exchange. But for the most part, you know, it has had a really terrible tumble to the downside. And it's actually seen a good recovery, right? It's got good moves to the upside. And obviously go ahead and check out the price prediction video that I did on ICP if you haven't already caught it. But yeah, we've got some interesting levels. Now I'm going to mark up a couple of key things on here. So in today's video, we're really kind of hyper focused on where we want to be kind of taking profits out of the market, where we want to be coming out, where I'm going to be selling, right? I hold a reasonable amount of ICP. And I will be looking to dollar cost average out of the market in the same way that I dollar cost averaged into the market. Okay, so the first thing we want to do is we need to identify on this chart several key areas. I'm going to first of all look at support and resistance levels, and then I'm going to use Fibonacci levels afterwards. Okay, so let's go ahead and take a look at a few of these things. We're going to start reasonably low to the bottom where we're actually currently finding support levels. So if I'm going to zoom in here just a little bit, we're going to take a look at this historical moment in 2022, specifically where we had kind of the FTX collapse and all that kind of stuff. Even though they've relaunched a damn thing, you know, pay attention because that's a massive red flag to me anyway. So here you can see some interesting zones, and these are quite broad, but I'm going to draw these across because they do relate to the current price action. You can kind of see this previous area here of basically resistance and support. We have both within this little range, and although we're dipping in here, we can see that actually we're finding support on what was historically resistance, and we can refine this a little bit, but this for reference was $4.52 to $8.23, right? If we go ahead and look at this in a little bit more detail, we can actually kind of be a little bit more specific about where the resistances were. Okay, so you have this range right here. I'm going to leave that on there. We'll then draw in this one. If I actually go ahead and stop doing that, there we go, move it into here, pull that one across. This was an interesting subsection as well. Here there's an interesting range, but it's not as clean. I'll go ahead and leave that looking like this, pull that across. So you can see that inside this little section, this one's actually of immense interest just over here, a little bit lower as well. But as you can kind of see, there's lots of areas within this range that have been acting as support levels for us. And you can see if I pull these all the way across, how the price action is reacting to them most recently as well, coming all the way down, moving up, consolidating on this lower range and so forth. Now that's not overly important for dollar cost averaging out of the market, but that's really important for dollar cost averaging into the market if you haven't maybe kind of got into ICP, for example. Now, at the moment, you can see here that we do find this upper area of resistance as well. Okay, so we'll go ahead and draw that in as well, because this is important because obviously these are the major ones that we're currently facing when it comes to ICP. So let me go ahead and draw that in here. Now, if I pull this across, you can see how this was also a previous area of support that we lost, right? And now we've turned it back into resistance. Okay, so that's an interesting range. Over this side here as well, we can see also this really interesting kind of structure here. Also how we kind of rallied up and kind of consolidated in these ranges. So again, a few points of reference. Here you have another It's really quite small, but I'll try and showcase that a little bit. You can see here this was an interesting point of previous support, right, that turns into resistance. So that's going to be a really interesting level for us as well. Obviously, we're getting these quite fined and refined, I should say, as we kind of think about them. And then over here, we also see a nice little range. I'm going to pull that in. And then there's two here that are of interest to me as well, specifically as we start thinking about bull market and where that's likely to go. And don't worry, guys, I will go through all these levels in a moment and just going to draw in all these levels that we can see on the chart. I'm not going to worry about going terribly too high in terms of where we think these resistances are going to be. And there's a good reason for that, simply because I don't see the market really pushing all that far, but I'm going to draw them in because I do think that these are going to be key areas for us. Okay, I'm actually going to have to go ahead and just pull these all the way across so that we have something to kind of look at in terms of the current price action. So bear with me while I do that, and then we can kind of get into the main subject matter. Okay, so here we can see some key areas for ICP's price action. Okay, and these are obviously going to be really important for where we think we're likely to see selling pressure start to mount up. Now, selling pressure mounts up in these areas because of what's happened historically. Okay, so if people have been holding ICP for a very long time, maybe they were dollar cost averaging, maybe they were buying into the dip, believing that we're going up, back to $2,000, they potentially get trapped in these positions on the way down. And so if they hold all the way through and they kind of come back up to these ranges, it means that's an area where they might be able to kind of come out of their positions neutral, right? So you tend to find that there's sell pressure at these ranges. Now let's talk about where we think the price action could be going, right? So in all of this, we can see here that we do have upper areas coming in at around $136, right? So that upper range that I've drawn on is $124 to $136. Underneath that, you have $92 to $122. Below that one, you have $79 to $87. Below that, you have $72 to $76, $54 to $58, and then lower than that, $36 to $38, and then down here, 15 to 20. Now, what you will notice is the gaps start to increase, right? So you have a pretty broad, big broad gap here. You have a slightly smaller gap, and then all this area here is really quite condensed together. Okay, so what this tells me, okay, without using anything else, right, we've just taken some of these previous support resistance areas, tells us that it's going to be quite easy. Once you break this resistance, that we can be looking at the next resistance, right? It's going to be quite easy for the price to move that kind of jump. Then it's going to be quite easy to get to the next level. But as it starts to come up here, where it's really condensed, the sell pressure is quite intense, and it's quite intense within quite a small price range, right? And so that's going to make it quite difficult to push on through. Okay, so we already know that when we think about dollar cost averaging, we want to be dollar cost averaging into a market, right? That's the typical stuff that retail investors would know, right? As price retraces, you buy the dip here, 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 and you've got a great average price somewhere in the middle of all of that. Let's just say it's roughly around here. And that's great, right? So you've been buying all of these dips on the way down slowly, gradually. Let's say maybe you start at 10%, you go 20% here, 20% there. Maybe you do, another 20% over this side, for example. And maybe finally over here, you're dropping in like another, X amount of percent or so. Okay. Now, if you're doing that, then you get a great average price. Now, if you've done that, that's fantastic. But how do you exit the market? Do you just have one price target at the top here that you try to sell on? No, not really. You do the same thing again. This time you do it in reverse, right? So you know where all the resistances are. You start selling a little bit here, you start selling a little bit there, you sell some here, you sell some up here, and then you sell some up here. Okay, and you dollar cost average out of the market. Let's say you start at 10% and you go to 20%, maybe you do a 30% up here as well, right? And then you kind of finish off, maybe you have a little bit left in the bag where you can kind of then go ahead and dump it all in one go up here, for example, right? Obviously that would be another 20%, not 10%. So really important that we understand that, right? Because if you kind of have one target, you may never hit it. And the worst thing is for a retail investor is having that idea, right? We're going up to, let's say, $150 on ICP, right? That might happen, right? It might not happen, but it might happen, it might not, etc., right? We don't know. I'm going to go ahead and draw a white line in just at $150, right? Around about here, right? So that's your target. But in doing so, you may have pulled that number from somewhere. It might just be a finger in the air job, whatever. But you're not necessarily taking into consideration all of this sell pressure that sits just below $150, right? And so if you're waiting for that, the price action might do something like this. It might come up, hit rejection here, come find support, move up, find support, move up, consolidate up here a little bit in this kind of overlapping nature, and then just absolutely tank into a bear market. Maybe it only reaches $100, for example, right? But your target was $150. Now you're trapped in a position that you didn't dollar cost average out here, here, or any of these movements, and instead you're now holding your 100% bag, waiting for the price to recover. Okay, so the best strategy, at least I found, and what I intend to do, is to dollar cost average out of the market. This is something that we do with our members. So if you're serious about understanding the dynamics of the crypto market, dollar cost averaging in, dollar cost averaging out, or even looking for reversal patterns and then trying to actually base your exit on a reversal pattern, the Discord server linked in the description down below and our memberships that you can get from the Discord server are basically really helpful for that, because I showcase all of my exit strategies in terms of dollar cost averaging out, the actual price levels per cryptocurrency, and then in the Discord server you get alerted when those targets are hit, so everyone's aware of what potentially is happening in the space. Plus I'll actually tell you what I'm doing, whether I'm buying or whether I'm selling. In fact, the entire Cheeky Crypto crew do that, right? Chris, JB, and so forth. So if you're not in the Discord, you're not a member, then you're missing out on some of that fantastic stuff. Now, let's go ahead and enhance this even further, right? So it's great that we know that we have all these resistance areas, but what we also need to do is we need to take into consideration the Fibonacci sequencing, because there's going to be psychological areas as well as these resistance areas. Okay, so if I go ahead and measure that distance, I move it over to our wick lows. Here we can see some very interesting things, okay, on the fib levels. So within the fib levels, this entire range here, $15.18 to $20.98, is already quite clearly a resistance level. Okay, this is a resistance level at 50 and 0.618, if I can talk today. Okay, this is going to make it quite difficult to initially get through there. So I expect kind of find some consolidation in this range, right, before we break on through it. Now, when we break on through it, what do we see? Well, we can see here that the 882 is right there in line with that next resistance, and it's just a little bit lower than the 1-to-1. Okay, so we know that this is also going to be a very key area for retracement or rejection. Now, as we kind of address the higher ranges, we have got this particular range between $54 and $58, and this one absolutely falls in line with what our typical retracement or typical kind of area of expectation should be, which would be this yellow box that I'm drawing on right now. This is between 1 and 1.236. This is the most typical area that the price action is most likely going to go to. So if I were to just have a single price point that I'd be aiming for, it would be $42. However, we would be dollar cost averaging on this journey to the upside anyway, right? Dollar cost averaging out of the market. Now, if we can breach this area, fantastic, because that means that we can approach the $91 level. Okay, now the main takeaway would be $145. If we can reach $145 for ICP, which is in line and just unfortunately above these areas of resistances, that area would actually trigger a much bigger run. So then it comes to dollar cost averaging, it's good to have a strategy as to kind of how you want to dollar cost average. What are those percentages, right? You've got 100% of your bag, okay? You've got 100% of it. That's a really bad percentage, but you kind of get the idea, okay? Are you going to start small or are you going to start big? Typically, I like to start small with a 10% dollar cost average out of the market, okay, and then I like to build it up a little bit. Maybe it goes to 20 or 15%, right, and then another 20 when we get to the next level, okay, and so forth, right, and we build it out, and then I always leave roughly around 10% of my bag to ride for the potential of a moonshot, because you don't never know, right? Nothing is set in stone. We don't know 100% that, price is not going to have a massive breakout. So I always like to leave that little bit of wiggle room should we see a fantastic surge to the upside. In this case, that would happen at about $145, and I would expect at that point to see breaching the $200 level, right? So taking all of these into consideration, where would I be looking to sell, right? The whole point of this video, right? What are the dollar cost average out areas of focus? Well, for me, this dollar cost averaging out has to start at 0.618, okay? We have to then consider this area of 882, We then have to think about $42, and we have to think about $68, right? That's 4 levels, with leaving one final kind of 5th level to ride, with the idea of coming up into these higher ranges, where I would be thinking about, okay, if we can't get to and we see a reversal pattern, then we want to dollar cost average out anywhere really between these levels of the low side of $92 and the high side of $136. Okay, the percentages can be different. We might start 5% down here, right? Then we might gear that up to like 10%, right? And then it might be 15%. Okay, and then we might be starting to think, okay, well, here we have 20% out of the market. Let's go ahead and maybe drop out 40% when we get into this slightly higher range. Okay, and then let the rest ride, for example, right? So that's a possible scenario that you could potentially be doing. So what is this? This will be 60%, right? So you still have 40% left. Maybe that's not as aggressive as you need it to be. But so forth, right? Now, I can't tell you exactly what my percentages are going to be for dollar cost averaging out of the market, because, you know, I don't want to kind of lead anyone to like the idea of financial advice, because I'm not a financial advisor. I can't give financial advice. All I can do is say that there's multiple different strategies for how you might want to exit out of a market. And I've personally found that dollar cost averaging out has been a really good strategy. And there's a couple of reasons for that. One, obviously you're locking in profits as you go, right? Which is the aim of the game when it comes to investing in cryptocurrency. They call it an investment for a reason. It's an investment. You want a return on investment, an ROI, right? You're not doing it for shits and giggles. You're not throwing money at crypto projects because you want, you know, the crypto project to do phenomenally well. That might be one particular element. You really like the technology. You want them to be successful, but it's an investment because you do expect a return on that at some point in the future. Whether your time horizon is 12 months, 36 months, or maybe 72 months is totally up to you and your investment strategies, right? In which case, if you're super long term, this really isn't going to apply with these numbers today, but it is going to give you an idea of dollar cost averaging out over a significant period of time. The other thing that's really important when it comes to thinking about dollar cost averaging out is, let's hypothetically say we find major resistance up here at $42, right? We've kind of taken the first profit here, we've pulled back, we've pushed up to 42, we've pushed back, and maybe we're pushing up again, right? This is the opportunity, your dollar cost average out here. And if you want to, because it's a first kind of dollar cost averaging out area, you could do what we've called double dip. Essentially buy back on the retracement. And as soon as you start thinking that the market's reversing, you jump back in and your dollar cost average out again at the same level with the same percentage. Okay, this means you double dipped. You basically sold twice at these levels here, and you can then ride up to the next level up here, for example. Again, the higher this goes, the higher the risks are with this, but essentially you can come out, you can buy the retracement, and then you can sell again at the same level and then let your remaining bags ride. Okay, lots of different strategies. I did that a lot in the previous bullish market of 2021. Basically, we called it double dipping because you sell and then you just buy back and you sell it again, double dipping into the same levels of basically dollar cost averaging out. So lots of fantastic levels here. I do think that there's a good amount here. So for the most part, for me, I would be thinking about $19, well, I'll call it $20 as your first level for kind of coming out of the market, first area of dollar cost average out. And then I'll be looking at $27 for the next level. I would be looking at around $34 for the level after that. We'll be looking at $42 as a key price point for the next level. And then we'll be looking at $68 and beyond. And of course, you've got 91, you've got 100, and then you've got 145. And if you do pass 145, I think it's a high probability of 200, right? So you can have as many of these levels as you want. For me, I try to keep it nice and simple around kind of 5 or 6 of them, but you kind of get the idea. So that's what I wanted to kind of express in today's video. You can let me know in the comments down below what's your thoughts on this dollar cost averaging out and at the levels at which I think are reasonable price expectations with reasonable ROIs on the investment. Let me know in the comments below what your thoughts are. If you found it useful and informative, smash the like button. If you're new to the channel, subscribe, and don't forget, guys, to check out that video right there. It's not one that you want to miss.